Good morning, everyone. It is April the 19th, 2016, and I don't know about the rest of you, but I sure feel financially lighter. I've lost some weight here this last week, given income taxes and quarterlies and everything else. I always feel like I'm doing reasonably well until quarterlies roll around, and then I feel a little bit lighter. Time to get back to work, right? Okay, very little news overnight. China, we opened yesterday, was down because of crude oil prices. Europe was kind of break even. Both China and the Asian markets and the European and UK markets are higher in follow through buying from what we had yesterday. Markets were straight up yesterday. There was just really no setback. I think the E-mini takes out 2100 today. I think the E-mini is going to make new contract highs. And we've talked about that for the next month. What would screw the market's mind more than anything and make the Fed really, really happy would be new contract highs. Lots of articles about the massive shorts that are in the market. The first round of protection for those shorts was to buy ETFs or button up the portfolio with futures, which they can still do. Right now, we'll see how dedicated they are to short positions in individual issues as we run above 2100, as I anticipate this morning, and perhaps make new contract highs on this move. One of the articles cited that Goldman thought we would be at new contract highs by the year's end. Looks like we're going to get there earlier. Futures don't screw around. Markets don't screw around anymore. If you're supposed to be at 2100, bang, you're there. If you're supposed to be at 1700, bang, you're there. Over the years in trading futures, every major move completes itself, and usually within 60 to 90 days it's over. And we've seen it in crude too, with the big bust that came. So here we sit. We've got support at 130.04, 130.08. If we do our splits, we're looking at B's, and this would be the correct combination right now for the market, and we might as well just break out yesterday's selling. So we've got a B, and we've got volume at 16. So, and we have this high at 13. So 12 to 16 is our first sell band, and pretty good chance, depending on what happens in the equity markets, to at least get back and retest the 13 level, give or take. So that would be sell 1. 19 to 23 would be sell 2. On the buy side, we are pointed lower, so 1 to 5, buy 1. Again, with current Fed interest rate policy, it's really difficult to break this market. It will trade lower, but the bottom won't fall out unless we get an obvious piece of news. And housing starts plus 1.167. That would be supportive for equities, not so for treasuries. Permits plus 1.20. Hard to say. These numbers could come in a little bit lower than forecast. So there might be some room for disappointment in these. Won't know, of course, until it actually happens. But the E-mini's reaction to that news is likely to be the market's focus. Okay, one of the things that we learn is that we can't fight the tape, and we're at the bottom edge of a trading range, and we can see pretty clearly. And that support, really pretty good support, is in the 28 level, and they covered above that. They didn't take it in. So we know there's buying below 28. Right now, we know that the market is rejecting prices above, say, 65.08. So our first little band of resistance is going to be 8 to 12. So 15 to 19, sell 1. 27 to 31, sell 2. On the buy side, we've got support 24 to 28. So 17 to 21, buy one. That's just picking up, letting them get stops beneath that. And then 5 to 9 would be buy two. The bomb makers were busy yesterday. A huge bomb went off in Afghanistan, and I understand an Israeli bus, I don't know if it was blown up yesterday, maybe it was the day before, and you just don't read about it in the press. They don't emphasize the terrorism in the Middle East that's being promulgated or put out by the usual suspects. Don't talk about it, it's not there, right? Okay, looking at gold, we had 45, 47 as our backup sell. That's where we are right now. So make 47.50 sell 1, 54.56 sell 2. Gold is higher. Crude oil was higher. Started out that way. E-minis higher. I mean, something's not. I mean, the markets aren't aligned. They're not trading the way that they normally do. Treasuries are a bit lower. If treasuries are lower, you'd expect gold to be a little bit lower, with crude and E-mini higher. Okay, the last rotate down stopped at 42, basically 43, so 40.42 buy 1, 35.37 buy 2. Longer term, I like the long side of gold better than I do the short, for reasons repeated ad nauseum. And one of the reasons that, we talk about the factors influencing the market, we talk about them till we're blue in the face, we keep mentioning them, is that it's where the market's focus is. And you have to do that sort of analysis to strategically think. Then you have to think about what would change things, what would turn this market upside down. So if that occurs, you're prepared to act. You're not sitting there, oh my God, what just happened? And so that's why we do it. And you can see the euro is trying to trade higher right here. So this is a pretty clean break in the market. And that comes up against 113, basically 65 to 75. So looks like we're pointed higher. Sell 1 75, sell 2 14. On the buy side, 30 to 40 was resistance. Probably reasonable support right now, so 30 to 40 buy 1. And then the buck to 15, buck to 10 for buy 2. Poor Mario awakens today to a higher euro. What is a central banker supposed to do in this day and age? Crude oil. Okay, Saudi Arabia came out and said that they are prepared to defend market share. That's never good. That's when the bottom falls out of the market. Tomorrow is May expiration. You should be in the June contract today. And Saudi Arabia said that they could raise production 1 million barrels a day quickly, and they could raise it to 12.5 million barrels a day in the course of a year. They have that reserve capacity, and if they can sell that oil, they will in response to what Iran's doing. So Saudi Arabia is fighting with Russia in Syria. They're funding that. Saudi Arabia is fighting with Iran everywhere, including inside their own country with terrorist attacks. And they're pretty serious that they will not cut production without Iranian oil production cuts. So, and Iran has said they're taking their oil production from 3 million barrels a day to 4 million barrels a day by 2017. And how are they going to do that? With Western technology. So Schlumberger's and the evil Halliburton will have to get their work overseas, and Schlumberger's got a much better chance of getting Iranian contracts than Halliburton does because of the great Satan connection with Halliburton. So it's we're higher in defiance of the fundamentals. People kind of watching right here. I do think most people think the bottom's in crude, and I lean that way too. So if this next wave of selling, when it gets started, doesn't bust the $30 area and we start back up from then my guess is it's a $40 market plus or minus, which is needed. I mean, I don't want to see a lot of good people have lost their jobs, and it really hurts the U.S. economy. So where is resistance? It's at 42. So 75 to 42, sell 1. 42 and a quarter, 42.50, sell 2. On the buy side, like to get it done below 41. So 40.75, 41, buy 1. It might be take 41 and a quarter to get in, and 40 and a quarter, 40.50, buy 2. And we're probably going to get some support in the market due to contract expiration. That tends to rally this market as shorts cover and roll those shorts from May into June. But the fundamentals for crude oil continue to be weak with oversupply, the market's focus. Okay, the E-mini. Lots of shorts out there. The Fed knows it. The biggest buying strength or contributor to support the market is corporate buybacks. Why do they do that, and why will they continue to do it? Interest rates are low. They can borrow money really, really cheap, and they can protect their compensation packages. They fire people. They cook the books. Alcoa is probably the most famous examples of ways that you can meet your projected earnings per share with one-offs, reconfiguration, all sorts of goodies. So the Fortune 500 know how to do that. They have the means and wherewithal to do it, and they do it. And it fits with current government Fed policy, higher stock market. So they won't get in trouble for doing it. $2,100. We know there's stops above that. Remember we talked about on the F1 screen, as long as this 2030 area held. And this number has come down. When we started off, each day we lose volume, rolls off or peels off above us. So 90, it was 96, 97, and we made that. So right now we've got it at 90 on 4-point increments. So low volume holds. You don't know how or what it will take to get there. You just know that you're going to get there, and that's a great milepost or path that's laid out in front of us every day. We know where the low volume numbers are and the high volume numbers are. So stops above 2,100. I think that's where we're going. If we get above 2,100, most recent resistance after that was 2,108. So 2,100. This 99 to 01 area would be sell 1. 5 to 8 would be sell 2. That's where resistance is. Then if we bust through that, 2110, 2115. On the buy side, we've got a London low at 93. We're at 96. They do make us pay up. So 90 to 93, buy 1. Might take 95s to get in. The housing numbers are supportive if they come in forecast. My guess is they can come in a little bit lower than that. Don't have a real strong feel about that, but some of the housing numbers have been mixed. So 85, 87 is buy 2, 90 to 93 is buy 1, sell 1's 99, 2101, sell 2's 5 to 8. And it's going to take a bit to get everything up and written, done, and out. I'm going to get busy on that. I will be back with you as soon as possible.